Hi, my name is Jamie York, and in this video I'm going to be sharing with you how to find below market value properties. Before we get started, make sure to hit the subscribe button if you're interested in finding out more about property investment and you can start to immerse yourself to propel yourself in your investment career. So first of all, what is below market value? Now, it baffles me when people go, below market value doesn't exist. Now, let me just give you a short explanation through the use of the board next to me and some diagrams. So I've actually heard some pretty experienced people say below market value doesn't exist. Property is worth what people are willing to pay for it. And then in the next sentence say, oh, I do believe in a discount to the market value. It's just like, right, let me just impart some wisdom on you. If there is a discount to the market value, then that is below the market value, hence below market value. But, how do we actually work this out? Well, people are right when they say a house is only worth what somebody's willing to pay for it, but that doesn't mean it's only worth what you're willing to pay for it. So let's say you've got a row of terrace properties. You can tell I don't earn my money from art, but these are your properties. If we know there's an entire street of these properties that we're going through, and let's say 2 out of 10 have recently sold, let's say this one here sold and this got £100,000, and we'll say that this one sold here as well, and that one sold for 97,500, and then let's say one down the road sold for 102,500. It wouldn't be a stretch to say that this property here that we're going to look at buying, if you had to take a guess, let's say it's in decent nick, it's in similar condition, what would you guess it's worth? Put in the comments right now what you think this property would be worth and a fair valuation. So if you put anything from 97,500 to 102,500, or you said 100,000, I think that would be pretty reasonable. Okay. Now, if I then secured that property, and let's say I ended up purchasing that property for £80,000, which is probably where I'm looking, around 80% of the market value or 20% BMV or below market value, then I think it's fair to say that I've got a £20,000 discount to the market value, or 20% BMV, which is below market value. So that's the overview of a concept of it. But why would somebody sell their property to you below market value? And more importantly, how do you find them? So let's just scroll up and take a look at this and look at the concept. Because if people are confused about below market value, there's an easy way to think about it. Let's talk about it against open market and investor market. So on the open market, if you are selling your property and you're willing to wait 3 to 6 months, you're willing to have multiple people come in, do bidding wars, people traipsing through your properties, offers, you're willing to accept the fact that 1 in 3 properties fall out of bed or during the legal process on the open market, would you say it's fair that if you're willing to do all of that and take that increased risk, that you might expect a higher value or higher price for your property? I think you'd agree, yes. Conversely, if you want to sell your property in the next couple of weeks, you don't want people coming to the property, you might have one person come to the property just to confirm they're happy with the layout and the quality that you've said, and it's going to get done and it's not going to fall out of bed, would you expect a lower price for that with a reduced risk? Yes. On the other side of the fence, if you're a buyer and you're able to go and view 20 properties, pick your favorite one, all of those sort of things, would you expect to pay a higher price? Yes, you're not rushed. You've got the time to go through legals, the mortgage process, etc. That's fantastic. Conversely, if you're an investor and you're looking at the property based on numbers, you've got a higher risk, you need to complete quickly. You might need to buy cash, bridging, or mortgage if you're quick enough, but you're only viewing the property just to make sure that the quality is exactly what has been represented in the pictures. Would you expect a reduced rate? Hopefully your answer is yes. Okay, so if you're confused by the below market value, or you find that it conflicting in your head, maybe see it as an open market and an investor value. So number one way of finding it, I'm not saying number one as the best way, by the way, I actually think this is one of the most ineffective ways, is estate agents. Now, estate agents, there are pros and there are cons of using an estate agent. One of the pros is 90+% of the market of people looking to sell their properties are going to an estate agency because that's how they know how to sell their property. You work with a good agent and that's that. The problem is 99% of investors and almost 100% of open market buyers are going to estate agents to purchase, okay? That means unless there is a very specific requirement from the vendor, you're going to be competing with first-time buyers a lot, because often buy-to-let properties fall in the price bracket of open market buyers, or people that are upgrading or downsizing, upsizing, whatever it is. So it's very difficult to get the property. So it's great to cut your teeth on. It's great to get involved in some way and build credibility and build those relationships and learn some negotiating skills, but it's probably not the best way of doing it. Okay, and that comes down to one, competition, because this is some of the big problems that come in there. So one, competition, and two, how do you actually make money in property? It's by solving solutions. How do you become a solutions provider? You need problems to actually solve. Okay, so you don't know the problem because 99% of the time the estate agent isn't going to tell you, or might not even know, the motivation towards it. So what you're looking for really in order to be successful is motivated sellers. So some people will call them distressed sellers. I don't like calling it a distressed because it ruins the mindset. If somebody's distressed, I think the mindset behind that is you're taking advantage of somebody. Whereas if somebody is motivated, then they are motivated, a motivated seller. They're willing to sell at a certain price or term, which we'll go through later, and you're able to help them out of a situation rather than take advantage of their situation. So in order to find a motivated seller, we need to be direct to vendor. And I'm going to go through three. Number three is the most powerful, by the way. Number three is the best opportunity to get direct to vendor and off market deals. But listen out to number one and two because they're really important as well. So number one will be leaflets. Okay, this is not genius. If you're going to be distributing, I won't go fully into this strategy, but I'll give you a very brief overview. You want to get an OS map, 1 to 25,000. And what you want to find is a quadrant like this, okay? Before anyone gets confused, it's not literally going to be a square. I mean a cluster of houses, and it's probably going to represent around 4,000 properties. Okay, and then what you're going to do is you're going to break this into 4 quadrants, 1, 2, 3, 4. Each quadrant's going to represent around 1,000 properties, and it's going to be week 1, week 2, week 3, week 4, and you're going to do it ad infinitum. Week 5, week 6, week 7, week 8, week 9, week 10, week 11, week 12, etc., etc., etc. On average, to give you an idea, you're probably going to end up getting sent out around 15,000 leaflets per deal. So that's pretty good. Like, are you going to deliver those leaflets themselves? No, you probably want to get those out. To give you an idea, you've probably got a cost of around £50 per 1,000 for print and distribution on that, okay? So you're going to have 15 times 30, so usually about £750 spend per deal. Okay, the pros of that is it's relatively cheap. It's getting it out there, and £750 to get a deal that's going to be making you maybe 15 to 20 grand, not a bad exchange of value. The downside is, you need to be strategic about where you're sending it. So I'll do another video on leafleting and how to get the best and how to reduce that £15,000 down, because I think that'll be really helpful for you guys. And it's all to do with delivery time and the type of leaflets and what you put on your leaflet. However, the downside is, how many leaflets do you get through your door and what do you do? And I think your answer says enough right now, okay? So let's move on to number 2. Now this is going to be direct to vendor or DTV letter campaigns. Letters. Okay, now pretty self-explanatory. Again, some very quick education, but I'll have to do some more videos on this for you. Is really, you're going on the open market, so on Rightmove or Zoopla, you're targeting people that have had their properties on for 3 to 6 months. You then limit it to the required property. So, you know, if you're doing buy-to-lets, you're probably not going to target the barn conversion that's in the middle of nowhere. So required properties. Make sure you're not sending them to everyone, and then you'll send a letter. In a further video, I'll do direct mail as a campaign, and I'll tell you our layout of how we script it. The pros of this are that you're finding people that are probably in a situation that they've not been able to find sell their property. They've tried a load of avenues and they're probably getting that motivated section. Okay, so you're likely going to be talking direct to the vendor on that. The downside is it's not off market, and people seem to get really confused by that. It's not so much the direct to vendor that's powerful. Yes, it's great, but it's off market that becomes really powerful. Okay, so again, typically on here, you're going to get between a 2 and 5% response rate. So let's be generous to ourselves and say 5%, there are some people going, I'll get 10%, yes, because you've not sent many. If you send thousands out over time, it will end up averaging to this. And then you're probably, again, going to get roughly 1 in 20. Okay, so again, if we say that each letter costs roughly £1, it's actually closer to 85 pence, but let's call it £1 just for this. You can work it out on your own. That's going to cost £20 there. And then how many 5s go into 100? 20 again. So 20 times 20, around £400 per deal. So again, better than leaflets, but not quite as good as number 3. So you're going to want to wait for that. The downside is, again, it's not off market. And you're going to piss the estate agents off. So it's going to annoy some people on there, okay? Because ultimately, if you're an estate agent and somebody's sending a letter, you know, I always say cut an agent. I'd happily cut an agent out of the process so I can communicate, but I would never cut an estate agent out of the fees, okay? It's actually an opportunity for you to build some really goodwill with people and go forward. So third, and in my opinion, one of the best underutilized strategies out there is Facebook ads. Now, Facebook ads, I find absolutely incredible. Over the long term, you're going to be spending around £7.50 per lead. And again, you're probably going to be getting a deal in around, let's say 1 in 25 over time. Okay, so 1 in 25 on that. The thing that I love about that, let's see if I can do that in my head quickly. So 1075, 150, and then £37.50, so £187.50 is your overall spend. So again, we've gone from 750 per deal to £400 per deal to 187.50 per deal, if my math is correct, which I'm 50-50 on now, but I'm pretty confident it's there. So, okay, so that's brilliant. That's amazing, but is that the best part about Facebook ads? No, it's not. Okay, the best part is over 50% of the people we talk to that are actually looking to sell the property. And the reason I say that is there's always going to be people that get in contact that don't actually have a property to sell for a myriad of reasons. Okay, just put that to the side. But the real power is that over 50% of them are off market, i.e. they're not talking to hundreds of people, they've not talking to estate agents, they haven't had it on with an estate agent, and that really brings you a lot of power moving forward. The great thing is then, in the conversation, you can find out their motivation, their mortgage situation, which is really important, because if you want to offer 80 and they've got a 95 grand mortgage, that's not going to happen. And their situational aspect, okay, which is how quickly do they need to move? Is it that they need to find a rental? And all of this allows you to become a better problem solver or a solution provider. So for example, a deal that we've got recently, it was actually during lockdown, we've got it valued at 90,000. We've got it agreed at 62,500. And she needed to move really quick, but also needed to find a rental property. So we reached out to our contacts, we found a rental property that's perfect, paid for her moving costs, and then got a property 27,500 below market value. Okay, so after some costs, we're making about 24 grand equity in that. Okay, so there are 3 key components to your marketing aspect that you can go out there. There's plenty more, and I'll definitely break down some videos. Facebook ads, I'll do a cluster of videos on in the next couple of months. So if you're interested in deep diving where it gets a bit more technical, but I'm going to show you my screen as we're doing it. So it'll be less of my ugly mug, more of my screen, but it's quite technical. But once you've got it, it's really simple to follow. So if you're interested in finding out more about leaflet campaigners and how to maximize, take it from that 15,000 to 1 to around 7,000 to 8,000 to 1, bring that cost down. If you're interested in direct to vendor, direct mail campaigns, or you're interested in finding out more about Facebook ads, and of course, what I'm going to be deep diving in is actual scripts to vendors and how to negotiate those deals in the next couple of months, make sure to hit the subscribe button to find out more. And if you've liked this video in particular, make sure to hit the like button and let me know, what strategy are you going to go out there for? What marketing technique are you going to implement? And what problems are you coming up with right now with negotiating to vendors? And I'll make sure to get back to you. So once more, hit the subscribe button and I'll see you in the next video.